Today, we're going to be going over the strategy that I use every single morning to day trade the S&P 500. Yo guys, what's good? I am sorry. I know I haven't made a video in a while. I apologize, but I've been really busy doing shit. I went on vacation to Alabama, which is a pretty nice drive. So I just been really busy, but I promise I'm going to start making YouTube videos more. And honestly, I'm going to try and be more consistent with posting YouTube videos. But anyway, today we're going to be going over the strategy that I have been using every day. Really, I've been kind of tweaking my strategy here and there to try and perfect it because, as you guys know, or maybe you don't, but I am unprofitable. I have not made any money from trading. I have passed a funded account, but I lost that same funded account. So we're kind of in our journey of becoming profitable, and I figured I would just kind of walk you guys through it and let you guys know what I'm doing. This is not financial advice. Do not trade how I trade. I mean, you can, but I'm not profitable. Just keep that in mind. All right, so as you can see, Mandalorian's a fire show, by the way. I'm in different clothes. You want to know why? Because the first time I filmed the video, I forgot to turn on my mic, so it didn't have audio in it. Okay, the intro had audio, but the part where I actually like show you my strategy, yeah, didn't have audio. So then I filmed it again just a few minutes ago, and I didn't turn my mic on for the chart portion. So I'll show you. So this, it swaps and it goes to this, right? I didn't have my mic on for this portion, but I did for this. For just the face cam, I had my mic on. I don't even know how I did that, but third time's the charm, you know what I mean? We're going to get this video out even though it's going to get 3 views, but that's okay because I love you 3 people that view my videos. Anyway, so as you know, we're going over my trading strategy. We're going to be giving some examples. We're going to be going over the rules that I follow. We're going to be going over what I look for every morning. And keep in mind, I'm unprofitable. I wouldn't use this strategy if I was you. Well, actually, I might because it's kind of like a mix between TJR strategy and Silver Bullet, ICT Silver Bullet. It's kind of like a mix between those two. But like, I know people use it. But like I said, I'm unprofitable. Don't listen to what I say if you don't want to. I'm not giving you financial advice. So just a heads up. We can go ahead and jump into the charts and go over the trade that I took this morning, actually. So let's go and do it. All right, so let's go ahead and go over the trade that I took this morning, actually, because I used this strategy. All right, so to start it off, we're just going to go over my rules, pretty much, what I look for every single morning. So, rules. I have to wait for a 15-minute sweep of liquidity, either buy-side liquidity or sell-side liquidity, either one. Then I have to wait for a 5-minute break of structure. Then I wait for a 5-minute fair value gap to be formed and then filled. If there are multiple fair value gaps, I will use the Fibonacci retracement tool for equilibrium. And I will always have a 5-point stop or risk 1%. And I'll always have a 10-point take profit. So I'll have a 2% gain, 1% risk for a 2-to-1 risk to reward. All right, so that's my rules. Pretty much don't need that anymore. So let's go ahead and go over the trade that I actually took this morning. So there is one thing. This morning we swept buy-side liquidity. So let's go ahead and go to the 15-minute. So market didn't open until this candle. But right before market open, we swept this buy-side liquidity, and we almost swept this buy-side. Now, a lot of times I will go on higher time frames to kind of see where we're wanting to move. So since we have all these imbalances here, here, all the way down here, I figured we would be bearish. So I was bearish on the day, plus on the 4-hour, we look pretty bearish. We just broke structure to the downside. So for that reason, after sweeping this liquidity, technically We did not sweep this liquidity at market open. It was a little before, but that's okay. We were looking for sells on the day. Now we go to the 5-minute, and we're waiting for a 5-minute fair value gap and break of structure to be formed. Where's the low? Right here. Now keep in mind, a low is a bearish candle, then followed by a bullish candle. That forms a low. It doesn't matter which one is lower. Whichever candle is lower is the one that you're going to take, or the one that you're going to consider the low. But as long as there is a bearish candle, then a bullish candle. So these two candles wouldn't make a low. These two bearish candles would not make a low. But this bearish candle and this bullish candle would. I hope that makes sense. Anyway, so there's the low. The low is broken, and this fair value gap is formed. So right here, we immediately are having our position at a 50% fill of this fair value gap, just waiting. As you can see, we do not get filled there. What else forms? This fair value gap. So anytime there are multiple fair value gaps, if there's more than one fair value gap, we are not going to strictly take a position off of the fair value gap, because you would be guessing which fair value gap you need to take a position off of, and there's no way to know which one. So we take our gone box, we draw our gone box from the swing high to the swing low. We wait for a swing low. Okay? After that, so after we have that drawn, we look at which fair value gap lines up with one of these points, right? So this fair value gap is just in between the 0.5 and the 0.75. But this fair value gap actually lines up almost perfectly with our discount price. So for that reason, we're going to be looking to get short off of here. Now, as you can see, this gets close to it but never touches it, never fills this fair value gap, and dumps. So most people aren't going to want to take the trade after this, but you've got to keep in mind that these trades can, they can take place at any point in time during the day. There's no time frame that they happen. So I ended up getting short right here after getting filled from my position at the discount price in this fair value gap. I had a 5-point stop and a 10-point take profit, and I ended up hitting my take profit. So that's the trade I took today. I also made a mistake. So this is why kind of finding a bias on higher time frames is important, because technically at market open we swept sell side liquidity first, and I actually took this trade, which was a mistake. I didn't take into account our higher time frame bias. I took a long off of this fair value gap because we were bullish technically, so I took this long and got stopped out. That's why you always need to look at your higher time frame bias. It will basically help you have a higher win rate. It's obviously not going to stop you from losing, because you're going to lose for sure. So let's go over another example. Let's go over the trade that I took yesterday. It was honestly kind of similar to this one. So we go to the 15-minute time frame. We always start on the 15-minute. Or you can find your bias first. So 1 hour yesterday, this was yesterday. We kind of had the same bias. We haven't broke structure to the downside yet, but we have all these imbalances that need to be filled. So we were kind of bearish yesterday. That was our daily bias. So we go to the 15-minute time frame. Sorry. Go to the 15-minute time frame, find the market open. Market opens at 8:30 for my time. So we're bearish. We're looking for sells, right? Or we're not only looking for sells, but that's our daily bias. So that kind of, if your daily bias and your smaller time frame bias line up, that gives you a lot more confluence than if they're contradicting each other. So today our biases lined up, but just like this, yesterday we swept sell side liquidity first in pre-market before market opened, right? But I didn't want to get long because of our daily bias. So we push up here, we sweep this buy side liquidity. We go to the 5-minute time frame, and what do we wait for? Break of structure, fair value gap. So if you look at this, technically this is not a low. Like right now, this is the low. So right here, there's no low formed because all we have is a move up and then a move down. Now this is a high. So the reason that this isn't a low is because there's no bullish candle, bearish candle, and then another bullish candle making a low. It just kind of goes up and then goes down. So this is the low right here. When do we break the low? This candle. Now, you've got to take into account we have this fair value gap, we have this fair value gap, we have this fair value gap. So there's 3 fair value gaps. That means we can't just guess on which one to enter off of. So we take our gone box, draw it from the swing high to the swing low. Now, which fair value gap lines up the best with one of these? There's no fair value gap here. At equilibrium, this fair value gap kind of lines up, but at our discount price, we have this fair value gap that pretty much lines up perfectly with our discount price. So what does that mean? All we have to do is wait for this discount price to get hit. We have a 5-point stop and a 10-point take profit. And we end up hitting our take profit. Now, in this situation, you could have taken a trade off of this equilibrium, but then again, you would have got stopped out most likely unless you had like a wider stop above these highs. The reason that I have a 5-point stop is because I trade futures, so I have to trade contracts. I don't have like a lot size, so it just makes more sense for me. Plus, when I back tested this, I had a 5-point stop, 10-point take profit every time, and it came out profitable, so that's what I'm going to use. So let's go ahead and go over one more example. Let's go to the 15-minute time frame and just scroll back. Let's just scroll back for a little bit. So let's go here. So market open is here. Let's look at our 1 hour. So what are we on the 1 hour? Well, if this is where we are right here, we just swept this. Ooh, we almost swept this buy side liquidity, and we have these imbalances that are open. So we're most likely going to be bearish, and obviously it's way easier looking at the charts like this than actually doing it live. Obviously, it's going to be a ton easier to do that, but eventually you will learn how to find daily bias. But if you look at this, market opens, it pushes up, it sweeps buy side liquidity. So what does that mean? That means we are looking for sells on the day, which kind of aligns with our daily bias. All right, so market opens, pushes up, sweeps buy side liquidity. What are we waiting for? 5-minute fair value gap and 5-minute break of structure. So all we need to do is be monitoring the lows. So bearish candle, bullish candle, this is a low. Bearish candle, bullish candle, this is a low. This comes down and sweeps all this, but it is a bullish candle, bearish candle. So technically this isn't a low. We're still going to count this, but bearish candle, bullish candle. That means this right here is the low, and what happens to this low? It gets swept and also forms a fair value gap. So let's see. So what are we doing? Sitting here waiting for this fair value gap to get filled. This next candle also forms a fair value gap. So what do? We take our equilibrium, draw from the swing high to the swing low. Now, in this situation, you can do one of two things. So this does not line, it's not really close. The 0.75 mark is not really close to this fair value gap, and we can expect price to push up higher than just right here. So we're not really going to be taking a trade off this fair value gap. You can either take a short off of the strict equilibrium, or you can take a short off of the 50% fill of the fair value gap. It's really up to you. I would probably go off the equilibrium just to be safe. So we have a 5-point stop and a 10-point take profit. And we end up hitting our take profit on this trade as well. So that's kind of that example, you're obviously going to lose some trades, and you're going to have to get comfortable with um, finding a daily bias and finding the draw on liquidity, and that will help you a lot with deciding which trades you're going to take. So yeah, that's pretty much the gist of my strategy. I went over the rules. I went over what I look for every single day. So that's pretty much what I'm looking for every day. You can use this strategy. You can backtest it. You can do all that good juicy stuff. Like I said before, it's kind of a mix between Silver Bullet and TJR strategy, but I think that finding a daily bias is a very important part of the strategy, because that's really what makes it profitable. Because if you just kind of, okay, sweep of liquidity, break of structure, it might, I don't know. That's not, I back tested it with a daily bias, so that's what I usually trade it off of. Yeah, that's my strategy. That's what I do every single day. I hope you guys could learn a little something. Keep in mind, I am not profitable. I know I've said that a lot, but I'm going to keep saying it because I don't want you guys to base all your learning off of me. For you 3 people that watch my videos, I love you. But watch people like TJR, ICT, Tactical Traders. Go watch them. You can learn some stuff from me, but you're going to learn the majority of your stuff from people like that who have been doing this for years, who are profitable. I'm just doing this because I want to help people. I want to show people what unprofitable traders go through. And I just like social media. You know what I mean? But yeah, that's going to be it for this video. I hope you guys enjoyed. If you did, leave a like, subscribe, comment video ideas that you want me to make. Doesn't have to be only about trading. But yeah, that's going to be it for me. So I will see you guys in the next one. Peace out.